Mohamed El-Erian, just off the panel this morning where I'm sure the news of last night, the killing of Osama bin Laden, started off the conversation. The markets reacted positively today. Is that about what you would have expected?
Yes, in the sense that the market are balancing two things. On the one hand, a specific security threat has been eliminated. And
despite the fact that there's some short-term security issues very much on people's minds.
Correct. So you have to balance a longer-term issue, which is the threat has been eliminated and the overall risk has been reduced, versus the fact that certain parts of the world, isolated part of the world, will not welcome this news. And therefore, what the market is trying to do is to navigate a longer-term issue with a short-term reality. The main question, Willow, in my mind, is a much bigger issue. And President Obama referred to it last night, which is, will this be a moment for unity and for common purpose? And that is critical right now.
And what do you think? Is this something that this country can rally around? Is it something that our political leaders can rally around? And might it serve as a catalyst for collaborations and the tackling of some serious economic problems on
It is my hope this is a golden opportunity for a catalyst, because we do need people to have a common purpose to solve some of the bigger issues that are out there on the economy and on the budget.
Okay, so why are you optimistic that this will be a golden opportunity?
I'm hopeful. I'm hopeful. It's certainly a catalyst that we didn't have 24 hours ago. Now the question, can Washington seize this opportunity? And my hope is they will, and we'll wait and see whether they actually do or not.
Your panel was on the global recovery and what is going on all across the world. There's a phrase that you're calling it the Global Orchestra, and suggesting that not all of the instruments are playing in sync with one another. What are the instruments that are out of sync?
So what I was trying to convey is this is a multi-speed world. Different parts of the world are doing different things. Some people have an inflation problem, other people have a growth problem. So the image is of an orchestra that doesn't have a conductor right now. So they are playing, the different sections are playing different musics, and it sounds pretty chaotic when you look at it from the outside. The question is, will the orchestra unify? Right now, we have too many countries pursuing national interests that conflict with global responsibilities. And that is why exchange rates are doing what they're doing. That is why oil is doing what it's doing. And hopefully, we're going to get some sort of harmonization.
Okay, before we get to the issue of harmonization, what are the loudest discordant notes at this point?
I think, first of all, it's monetary policy. Certain parts of the world are tightening monetary policy. That's the emerging world. Other parts are loosening monetary policy or maintain very loose monetary policy. On the fiscal side, certain countries have been forced into adjustment. Think of Greece. Others have chosen to adjust. Think of the UK. And the third group is delaying the adjustment. Think of the US. And then there are credit trends. Certain countries are being upgraded. Other countries are being downgraded. So it is a real differentiated outcome that investors have to navigate through.
Yeah, so who or what jumps in as the conductor?
Sorry?
Who or what jumps in as the conductor?
Well, the hope, and I say here's the hope because I don't think it's going to happen, is some external body like the G20 or even perhaps the IMF can be the conductor. I don't think that's going to happen. I think it's more likely there's going to be a lot of noise, and the economy, the global economy, is going to be subjected to risk of lack of coordination. It's what economists call an uncoordinated game. Everybody's playing the game, but they're playing it in a very uncoordinated fashion.
I'd like to just shift gears a little bit and ask you about something you wrote about over the weekend, and you called it Sleepwalking Through the American Unemployment Crisis. Rate this as a threat to the American economy and our long-term economic interests. How serious is it?
It is very serious.
The most pressing thing on the table right now?
On the economic front, it is the most pressing. Now, it may be because I've got a 7-year-old daughter and I worry about her future. But I think
with 20-something daughters, same thing. You worry about entire generations heading out into a workforce, let alone people who are older people who are currently unemployed with no prospects of unemployment.
That's absolutely right. And I think that there's too much obsession with a number that's not very meaningful. So we all quote the unemployment number, and we'll do it again on Friday, 8.8%, right? But there's something deeper. The size of the labor force is shrinking. The structural components of unemployment are going up. 24%, that's a staggering number. 24% of the 16 to 19-year-old are unemployed. And at that age, if you're unemployed for long, you become unemployable. That's the structural problem.
And that's a staggering long long-term consequence that we're looking at, dooming scores of the short-term unemployed to long-term unemployment. How do we address that?
So we have to recognize this for what it is. It is more than a secular problem. It's a structural problem. This economy created jobs in the last few years, but it was mainly in construction, housing, retail, and leisure. We need to now create better jobs, higher quality jobs, which means fundamental work at the education system, at worker retraining, at better social safety nets. That is where the debate should be. Instead, the debate is stuck elsewhere, and meanwhile, the structural component of the unemployment problem is getting worse. I don't even call it a problem anymore. I call it a crisis.
And what do we do to get that issue front and center in the debate? I mean, what do we have to do to wake up the sleepwalkers?
First, make it the central issue. If you make it the central issue, other elements...
But how do you do that? How do you make it the central
awareness, discussion, right? And just looking at the numbers. Forget focusing, and the media has a role here. It's not just about the unemployment number, it's about the composition of the unemployed. It's about 4 million Americans who have been unemployed for more than a year. It's about 6 million who have been employed for more than 6 months. Those are the numbers that the politicians need to focus on in order to understand that that should be our number one issue. And if we put that on number one issue, ironically, it will be easier to address the fiscal problem. It will be easier to address a number of other issues that we have to address as a nation.
Because once you get that solved, the consequences of solving that are an improved economic picture all around.
And also you recognize that in order to solve it, you've got to solve the housing sector. So you can't just allow the housing sector to say, it's okay, house prices aren't falling. Well, people are upside down on their mortgages and they cannot move. So labor mobility has come down. So that one theme encompasses so much of what's going on in the US economy that if it can become the central issue, we'll find it actually easier to solve other issues.
I'd like to talk to you a little bit about the Fed Chairman Ben Bernanke's press conference last week, in which he called inflationary pressures transitory. Is there a danger in essence, dismissing what is causing real people real pain as transitory?
I wish we could eliminate that word from the dictionary, because that word transitory, it results in complacency. So we are calling the inflation problem transitory. We're calling the unemployment problem transitory, which is another way of saying we can look through it. I don't think that's the case. I think today we are facing inflation issues. I think people are going to be surprised the extent to which headline inflation, which is up there, is going to drag up core inflation. Mm-hmm. It's not going to be an issue of core staying here and headline coming down. They're going to meet in the middle. And therefore, let's not dismiss it as transitory. Let's not dismiss Japan as transitory. The Japanese tragedies are having a real impact on our economy. I just wish we could eliminate that sentence because it allows people to not worry about things. When you say it's transitory, your mindset is, I can look through it. But I think that there's more there than simply what's transitory.
So, Mohamed, we were just talking about Chairman Bernanke's press conference. At the next one, if you were there and had the chance to lob a question in the direction of our Fed chairman, what would you want to ask him?
I would pick up on what he said about QE2, when he said that the benefits of QE2 do no longer dominate to the same extent the risks and the unintended consequences of QE2. So I would ask the question, what does that mean about unwinding QE2?
Mm-hmm. Is there, how much uncertainty is there, or what is the uncertainty? What kind of effect is it causing on the marketplace? We don't know, will there be a QE3? When will they begin to tighten credit again?
The naive answer is to say the Fed has telegraphed that QE2 ends on June 30th. Therefore, the market must have incorporated the end of QE2. The reality is there's a fundamental disagreement on how QE2 operates. So there are those who believe, like what the chairman said, that it operates through the stock, that as long as the Fed maintains the securities it bought,
which it said it's going to do by continuing to reinvest.
Right, things are going to be fine. And then there are those who say, no, it's also about the flow. The entity that was buying 70% of Treasury issuance is stepping away from the market. The Treasury is going to continue to issue. Who's going to buy it? So you look around for those people, which includes PIMCO, and you ask the question, who's going to be buying? And if you can't identify who's going to be buying, that means that there will be pressure on the price of the security for which the buyer has stepped out of the market. So there's a fundamental disagreement today as to, does it act to the stock or does it act to the flow? Which means that we don't really know what's going to happen after June 30th.
And we don't like not really knowing.
We don't like,
really don't
so
like that.
people are taking a view. PIMCO has taken a view. PIMCO says the flow matters. The Fed has taken a view and said, no, the stock matters. And I think people in the market are looking at this, and they will have to make up their mind as we get more evidence.
And if the Fed chairman said, do you have any advice for me? How am I doing? What would you say, other than get rid of the word transitory?
I would say continue to evolve the monetary policy as part of the overall U.S. policy. So he is talking about fiscal policy, which is important. And I would say one thing, look at the global consequences of U.S. monetary policy. Right?
What global consequences are you most concerned about?
The dollar. The dollar. It is inevitable that the dollar will weaken as the U.S. runs a loose monetary policy relative to the rest of the world. That has consequences. We can't simply ignore it and say it's other people's problems. It's also our issue. And therefore, in formulating monetary policy, we have to look first and foremost at the national dimension, but we must not totally ignore the global dimension.
What's your reaction to the adjustment downward in our growth rate to 1.8%? Is that transitory or a blip, or does that suggest something more or something worse?
I'm worried. So some of the impact is reversible. It had to do with weather. Some of the impact, unfortunately, not as quickly reversible, oil prices. But fundamentally, this economy still needs a lot of stimulus to continue growing.
You think we'll get it?
I don't think we will. I think the political debate has evolved in Washington to make fiscal stimulus more difficult. And I think that Bernanke acknowledged last week that the benefits of unconventional policies do no longer dominate to the same extent the cost and the risk. So I don't think we can depend on stimulus for that. We now need high quality growth, not borrowed growth.
I'd like to get your take on investing and investing opportunities. Obviously, widely noted that you're out of treasuries. What would it take to get you back in that market again?
So we're out of treasuries because we find better value elsewhere. It's a value proposition. Any investor has to ask the question, if I own this in my portfolio, is it because it dominates other opportunities? And when we look at treasuries at the current price, and when we look at the outlook, we think at the current price there's better value elsewhere. And
elsewhere would be, if you're not buying U.S. debt, whose debt are you buying?
Well, first of all, there's certain debt in the U.S. that's more attractive. So we find value in high-quality companies, multinationals, that have really gotten their act together. They've cleaned up their balance sheet, they've cleaned up their cost structure, and they are very attractive. We find other opportunities in the world. Like you say, it's a global marketplace, right? There's no reason why you should limit yourself to a certain place because of a label. Okay, investors get paid for the fundamental value of where they invest. So we see value in Brazil, we see value in Australia, we see value in Canada. So it's really about the global, and it's about looking beyond labels today.
Mohamed, thank you very much. I'm going to toss it back to Lisa right now in New York. Lisa?
Willow, thanks so much. And Mohamed, thanks for joining us. One follow-up question here. You know, early this morning after this announcement came out, we actually saw stock futures higher. We saw oil down. Now we've seen a little bit of a reversal of that as we see these new terror alerts being released. Do you think this actually adds short-term to geopolitical stability, or are we going to enter a period of time where uncertainty actually moves people away from riskier asset classes?
Lisa, it's both, and I know you're not going to like that answer, but over a medium term, there's no doubt that a certain terrorist threat has been taken out, and that is good for risk assets. But in the short term, as I said earlier, not everybody in the world is going to be welcoming this. There are certain places, and it's good that they're isolated and very few, that will want to react. And therefore, in the short term, the market also has to take into account that element. So what you see is a medium-term trend with a qualifier short-term. But Lisa, the big issue, and I keep on saying, is this is the moment for the U.S. to seize. This is a moment, to quote President Obama, for unity and common purpose. Because we're going to need that to deal with the unemployment, the budget, and a lot of other issues where right now there is no political middle. The discussion is so polarized that it's very difficult to see how we're going to get to where we need to get to as a country.
Along those lines, I mean, you're talking about what happens here domestically. We have certainly a lot of issues here within the U.S. But let's move to the Middle East for just a moment. A lot of people now talking about Pakistan. Why weren't they more involved? Are they really friends of ours? What will this mean for the rest of that region, and how will that impact a lot of people talking about oil today?
I mean, it makes that region as unpredictable as it has been. I think nobody, and that's a strong statement, but I really do believe it, nobody can predict what's going to happen in that part of the world right now. There are so many changes going on. Who would have thought Egypt and Tunisia would go through a revolution? Who would have thought that Libya and Yemen would be so close to being a failed state? Who would have thought that we would see in Syria what we're seeing today? And we don't know what we're going to see in Pakistan after this news. So the key issue for an investor is not necessarily to be able to predict that, because that's very quickly, but to be able to react quickly, to have the framework to incorporate this high frequency information, because it's almost impossible to predict, Lisa.
All right, Mohamed, thank you so much. I appreciate that. And thank you, Willow.
All right, thank you, Lisa.
Thank
Mohamed,
you.
thanks again from me as well.
Thank you.